All right, let's talk about our call of the day. It comes from Mike Mayo today of Wells Fargo Securities. It's about Goldman Sachs, and I'm going to read you what he says, okay? He hasn't downgraded it, hasn't done anything like that. He says Goldman has good long-term prospects with strong book value growth and share gains. Yet, the February 28th Investor Day may be a sell the news event, depending on how well it addresses questions about strategy, returns, and management. We had the scoop today, Hugh Sun did, our own, that they're going to scrap their idea for that direct-to-consumer credit card after a shift in their own strategy. So, Bryn, you go first on Goldman, right? When Mayo speaks, people listen. So what about this idea? February 28th, the day to watch. Could be a sell the news event, he says. What do you think?
I think that's great for investors for us to know that's happening. I think with Goldman, the IPO market and really M&A has been in hibernation the past year. They dominate that space. So I think that's a positive lever, as that will, of course, come back. Trading is about 55% of their revenues. They dominate that as well. And so I think that the question I have is that if they hired all these employees, I think they hired like 25% of their employees were software engineers. Was that for the consumer credit card? So they have to talk about that and right size that. And so I think if they give us a mea culpa, here's what we're doing, going forward, here's where we made the mistake. I think there's catalyst for this company going forward, because I do think it's best in breed with an asset management, with M&A and IPO, as well as in trading.
Okay. Also, Jason Snipe, you on Goldman?
Yeah, absolutely. And I think Bryn hits it spot on here, in terms of, this announcement. I think it's positive. I mean, the retail business is an expensive business, obviously, to try to break into, and them starting to pivot away, I think, makes a lot of sense. I mean, listen, if I look at the first quarter of this year, I mean, IB revenue was down 48%. Asset management fees were down 27%. The stock is still up 8% year to date, and it trades at 1x book. I think they really need to focus on the underwriting business. That will come back at some time. It was completely obsolete in 22. So I think there's some upside ahead.
Okay. Joe, what do we think about this? I mean, it's provocative. Mayo's a provocative guy. But to suggest that the 28th could be a sell the news event for a stock that's, up 8% year to date. What do we think?
I don't know if it's a sell the news event, because I think this is what you want Goldman Sachs to do. You want them to go back to what their identity was. And Bryn highlighted how phenomenal they were as a trading entity. When I think of Goldman Sachs, I think of Goldman Sachs, and I think about their ability to trade markets and to generate revenue doing that. So I think that to a certain extent, they lost their identity. It's one of the reasons why I'm invested for capital markets towards Morgan Stanley. I think Morgan Stanley knows exactly who they are right now, and the wealth management business is certainly thriving. The acquisitions that they've made with Eaton Vance and E-Trade have been additive to the bottom line. But I don't see that as a sell the news event. I actually think you could buy Goldman Sachs if they're actually going to message to the investment community that they're returning to who they actually are, because no one's better at what they do.